Good evening, Anita. Good evening, Anita. All right, you got my mail, Anurag. That's great. So, is everyone here, or are we waiting for someone? We have 6 of you, so some more people are yet to join. 3 more to join. Okay. While we're waiting for the remaining 3, any questions from the last 2 sessions? So, those of you who have already joined, how many of you have not done the homework? Dakshay says we should start on time. Yes, I completely agree with you, Dakshay. We should start on time. Yeah, that's true. So now that we are not running and with a backlog, we should be okay. We have enough time for today. So we'll start. We'll probably wait for them for another, say 2 minutes. Then we'll start. Okay. Yeah, that's a good idea actually. Okay, let's start in 7, 6, 2 minutes. Anita, what is that you said? Done while intraday. Done while intraday trading. Okay. Okay. So I got the mail only from Anurag. So that's why I asked. Okay, but are you clear with the concept, Anita? Yes? Okay, wonderful. What about Dakshay? Are you clear? Anurag says, can you explain swing highs a little bit? Yes, that's good. We will be needing swing highs in today's session. So let's discuss swing highs. Sure. Okay, so how this works is, now when you have price going up, okay, at a certain point it stops and reverses. So this price, the highest price from which the market had reversed, is called the swing high. We mark that as SS. So if you want to look at that same thing in terms of candlestick, you have one candlestick that goes up, then you have a couple of more, and finally there will be a candlestick which would have made the highest price, okay, and then from there you can see the candle coming down. So let's say it went high for 5 days and then it started coming down. So here this highest price, this is called the swing high. Alright, so this is the highest price from which the market has turned its direction from an uptrend to a downtrend. No audio. I am not sure if... Look. Vishal also says no audio. Can anyone hear me? Anurag says you're able to listen properly, right? Okay. Alright, okay. So I guess the problem is at your end. Okay, Anurag, are you clear with the swing high concept? So that's the highest price, okay. Now this candle was bullish, but even if this candle was bearish, you could still call this as a swing high. So it's when the market is going up, the highest price from which it turned its direction from up to down, that price is called the swing high. Okay? So you want to see on yesterday's session's example, okay? We can do that. Or instead of that, let me show you on the terminal. Do you think that makes sense? like a few stocks. Okay, so that's a chart. Now here, this is your swing low. Okay, and from here, where is the swing high? The next swing high that we see is this. So why do you think these prices are not this, this, this and this? Why are these not called as swing highs? And why are we taking this as a swing high? Yes, Anurag, perfect. Direction is not changing, exactly. So here you can see that after this price touched here, you see that direction has changed. So that's why this is a swing high. And again, because of this, after this low was touched, the direction changed, so that was a swing low. Yes, you're right. So that's how you always mark the swing highs and swing lows. Alright. Then again you see the swing high here, and then the swing low here. Then this is the next swing high, and then the next swing low. Alright. So that's how you keep making it through the chart. So here we have a swing high here, swing low here. Then we have one here, then low here, then the next. Alright. So this is important. Now today you'll find out why we are emphasizing on this, because today we'll talk about the edge of space strategy where swing highs are very important. Okay, but are you clear with a little better than you were before? After the first swing high, there was again a red candle after direction change. So let's see. After the first swing high, you're talking about which swing high here? Are you talking about this swing high? Okay, the one I showed. So you're talking about this one. Right, so here is the swing high, then this is the swing low, because from this highest price, it has only been coming down till it reached this low. So this was the next swing low. Alright. From here, this low was touched and then price started going up, went up further, and then on this day, this red candle, it changed its direction. Got it? Okay, wonderful. You're welcome, Anurag. Okay, so how many of you are familiar with options? Anita, that's good. Dakshay, alright. So the rest of you are new to this, is what I'm guessing. Oh, Dakshay said that's your favorite. Okay, lovely. So that's good. Let's go ahead and talk about options. So what we'll discuss today is what exactly do you mean by options, practicalities of options in terms of what all can be done. Then the edge of space is a strategy that this is the main topic for today, the edge of space, which is a trading system for trading on options. And then we will look at live examples. Right, so that's the overview, that's a plan for today's session. Now first is to understand the practicalities of trading with naked options. Keep in mind that this is a technical analysis course, alright? So that's why we will not be talking about non-directional strategies. we'll only talk about how we can apply technical analysis to have a trading system which works with the vehicle of options. Right, so basically how you can make a lot of money from the market using options and technical analysis. We are not looking at non-directional strategies, not in today's session. Alright, so those of you who are familiar with options would already be aware that options can be used for trading, which is on the basis of technical analysis. You can understand the direction and take a few trades. So that is what we will be doing today. It can also be used for protecting a long-term investment, which means if you have a investment on a particular stock for a buy, you can hedge it using options so that your risk is reduced. And you can also have option strategies without a look at the price, which is what is called non-directional strategies. So these two are also other things that can be explored using options. We won't be covering that as part of our session, but this is just for information that this is also what you can do with options. So let's go ahead and talk about this. Now to start off with, let's start with a quick example. We'll try and understand the difference between trading cash market and trading options. So here, let's say you have a lakh to invest and the price of, so you, for some reason you are bullish on this particular stock and this is the price at which you decide to buy at 258. Now for 1 lakh, how many shares can you buy? What we're trying to understand is if price moves from 258 to 264 and if your investment is 1 lakh, what would be your profit in terms of cash market and in terms of options? So how many shares would you buy? Okay, thank you Anita, 387. And what would be your profit? 387 if you buy at 258 and exit at 264.95. What's the profit that you make? Okay, so Anurag says 1600. Alright. Praveen says 2322. Yeah, 2322 is the right answer. Now let's look at the same trade on the basis of options. Right, so when you're trading with options, you make a return of 59,000 compared to 2,322, you make a return of 59,000 on the same move in ICICI Bank. How that works is, whenever you're buying an option, you are looking at a premium, alright? You're not buying the stock, you're not trading the stock as such, you're trading the premium, alright? So, based on the movement of the underlying stock, this premium, we'll talk about what the premium actually is, so this premium will be fluctuating. Alright, but this premium moves a lot. So when you saw the movement of 6 rupees on the underlying stock in your favor, this premium has gone up from 5 rupees to 8 rupees. Alright, so that is a 3 rupees movement, which is actually 59.43%. So since it's 59%, that's why on 1 lakh you make a return of 59,000. Okay, so this is the difference between trading the same move using options or using the cash market. So because of this, this market also attracts gamblers, which means people who are trading randomly, they're betting. So that's also, so you have a lot of gamblers participating in the options market. But we are not going to approach the gambling, we are not going to use it as per the gambling approach. We'll try to use technical analysis to make this return. Alright. Now, do all of you understand what we're talking about when we say premium? Okay, Anurag says no, and I think the rest of you are okay. Anyone else apart from Anurag who's not sure what premium is? Praveen, alright. Okay, great. So let's look at what we mean by premium. And before we get into that, let's understand what we mean by options. Alright, so you already know what equity is, right? Everyone knows what is equity. Equity is a cash market. Now, using the equity, you also have derivatives. So which means using the underlying stock, you can have derivatives, which is different ways of trading the equity market. So you have, it's divided into futures and options. Futures is based on equity market, you can only buy unless you're doing intraday. Intraday you can also sell. Futures you can do both buy and sell. So buying is called going long and selling is called going short. We discussed this yesterday, long and short. So when you want to do both long and short, you have to trade futures. Options is another derivative of the equity. So basically for the underlying movement, you have another instrument called options. In the case of an options, when the market is going up, let's say you expect a particular stock to be bullish or for it to go up, you always buy a call option. And if you expect the market to go up, you always buy a put option. Alright, so always in the sense for the strategy that we're going to study today. So we have the underlying stock, derivatives, derivative divided into futures and options, which is in short called F&O. So we look at what it actually means, what premiums are, how options work. But before we, let's go to the definition first. Now an option is a contract that gives the buyer the right but not the obligation to buy or sell an underlying asset at a specific price on or before a certain date. So you have to keep this in mind. It's a contract that allows the buyer the right but not the obligation to buy or sell an underlying asset at a specific price on or before a certain date. So that's the definition. Now let me explain this definition to you. And to do that, I'll use this example of Cleartrip. Have anyone seen this ad before? Lakshay says yes. Praveen, okay, most of you have. Wonderful. So Anita has not. Okay, so what this actually means is lock now, book later. So let's say you are all aware flight tickets go up over the weekend, right? Let's say you want to travel but you're not sure of the dates. So what it does is you can block your seat by paying a certain token amount. Okay, we call that a token amount, wherein your tickets are booked for today's price. Okay, if you want to not book it later, you can lose your token amount and you're done. Alright, but if you want to book it, even if the price goes up, that's okay. You're still locked in with today's price. So that's called lock now, book later. Let me give you an example. See here it says, not sure about travel dates. Lock fare now instead of waiting. Come back before the lock expires. So you have a few days before which you have to come back and buy the ticket at the price which you have today. So you pay the same locked fare. Alright. So even if the price goes up, you don't have to pay a higher price. You still pay the price at which you are locking your fare. That's what Cleartrip has done. Cleartrip's price lock feature. Is that clear? Have you understood what Cleartrip is trying to do? Now we will correlate this with options, but especially people like who do not, Praveen, Anurag, have you understood what is happening here? Praveen says yes, Anurag says yes, okay. Okay, here you can see book now, pay 1788 or pay 300 and lock for the next 3 days. So if you pay 300 rupees now, you will be guaranteed to buy the tickets at this price in the next 3 days, even if this price goes up. Alright, that's what Cleartrip is offering. Okay, now let's play a quick game. Let's say you are a booking agent. What you need to do is you need to book tickets for all your customers. Let's say you stay in nice apartments and everyone in your apartments books their tickets from you. So let's say you have 20 customers and you know that these guys are going to be traveling to Goa. So they approach you and what happens is you go ahead and lock 20 tickets for the fare of 1788. Alright, to do that you have to pay 300 rupees right now. So currently your investment is 20 into 300. Okay, now what you need to tell me is, let's say there's a music sensation like a music icon spotted in Goa, and because of which everyone wants to start flying to Goa. Okay, now because of that the price from 1788 goes up to 6,000 overnight. But since you had blocked your fare at 300, is there a chance that you will be making some profit doing this ticket booking business with your clients? If yes, how much is the profit that you'll make? More than 3 times? Okay, so can you tell me exactly how much? $1788. And what price will you sell the ticket to your clients? New ticket price is 6,000. So 6,000 minus 1788, I think that's 4212. That's your profit. So that's 4212 multiplied by 20. Alright, Anurag, thanks for the reply. Yes, exactly. So that 19272, alright, that is how much money you'll be making because of this facility that Cleartrip is given, which means that you are able to block the tickets. Alright. Now let's correlate. Is everyone clear how you'll make a profit of 19272? At least it should be more, right? 4,000 into 20 is 80,000. So it should be more than 80k. Yeah, exactly. 84240. Thank you, Vishal. Okay, so that's the profit that you make, 84. It's not important how much profit we make, we're just doing the calculation. What's important is how the profit is being made. So everyone understood the concept, right? Because then we can correlate this with options and how options work. Okay, so just keep in mind that we also had an expiry date here, which was 30th of November. All right, so this was, you got the chance to play this game only till 30th of November. Assuming you were in the beginning of November, so you had just a month. Okay, now let's try and correlate this with options. So here, stock options is your instrument, wherein in our example, the feature of locking in the price was the instrument. So when you're trading in the market, you always look for an instrument which is called stock options. All right, so this is your instrument type. in terms of trading in options. That's your instrument type. Symbol is ICICI Bank, which was the underlying stock, and in our example it was a Bangalore to Goa flight ticket. So ICICI Bank is the underlying stock, which is a symbol that you will select when you are looking for a trade. Expiry date in our example was 30th November. Here this is 27th of October. So basically you will have a certain amount of time to take this trade. We'll discuss that with examples. But expiry date, there will always be an expiry date. You cannot have an option trade without an expiry date. Option type, you have call and put. So in our example, since we were expecting the price to go, since the price went up, alright, we wanted the price to go up. So when you're buying, you always take a call. So bullish equivalent to long position is called a call, which means whenever the price is expected to go up, you always buy call. And strike price is very important. Strike price was the current price. Alright. So when you got this feature, 1788 was the fair. So that becomes the strike price. So when you're looking at the strike price, it should be as close to the current price as possible. So from here, if the stock moves from 260 to 265, then you are making, in fact even 261, anything above 260, you are in profit. So strike price is very important. You will start making profit above this strike price in case of a call or a buy option. And another thing is there is something called as the lot size, which is the minimum amount or the minimum number of shares that you need to buy. So you cannot just buy one stock. So even in our example, we had to buy for 20 people. So that's basically the lot size. You always trade with a particular quantity of shares. This is provided by the company itself. Or let's say if I'm trading ICICI Bank, so the contract size or the lot size might be 500. For SBI it might be 1000. So it's different for different stocks. You're talking about time decay. We'll get to that, Nageshwar. As of now, we are just understanding the terminologies. But yeah, time decay is important. So that's why we have certain rules to avoid losing money because of time decay. Alright. As of now, just focus on these important terminologies so you know what they mean, because you will come across all this while we are trading options. Okay. So first thing to keep in mind is, now we made a return of 59% on the options premium on this trade. But that was because when we took the trade, you can see we had a slight gap up and price was only rising, right? Since price kept rising, you could see that kind of return. So which means that your trade always needs momentum, which brings us to the point that the day you buy, from that day you expect the price to move in your direction. You don't want any sideways move. So you cannot trade the market like you would trade a cash market, where you take a buy and then you're waiting for it to come back in favor, go up and give you profit. Here you want things to move fast. So option trades always need momentum, and that's the reason we have chosen this particular strategy that we're going to learn today. Now, there are certain rules that have to be kept in mind. If you think a stock is to go up, then you only buy call. If you think the stock is going to go down, then you only buy put. Alright, these are the fundamental rules that you have to keep in mind. Strike price should be close to the current price. So if you have a strike price, meaning let's say okay, let's say this is Sensex. Okay, let's say a particular stock is trading at 542. So would you choose a strike price of 540 or 550? Okay, Dakshay says 540. And why is that? Why would you choose 540 not 550? Okay, yes, you're right. So, okay, let's keep it very simple. Since everyone doesn't know what it means, what the term in the money and out, what they mean. So let's keep it simple. Since your current price is 542, between 540 and 550, which is closer? Yes, exactly. 540 is closer to 542, so that's why you pick the strike price of 540. In case we had the market trading at 545, in this case, would you pick 540 or 550? Still 540? Okay, so that's good. You could also do 550, but depending, yeah, that's right, Akshay. You could do either basis on, but generally you pick 540 because if the price moves beyond that, so you make more money. But even in this case, you could have either. Both are right. Right. So what you need to keep in mind is when the market is going up, you buy call. When the market is going up, you buy put. Strike price should be close to the current price. These are two rules. Third rule is expiry should be current month, which means when you are trading in January, your expiry should be in January. All right. So let's say the expiry is on 24th. So on 22nd, you don't take the trade, not for Jan, but you can take for the next month. That's okay. So you always trade. You do not take a trade which is where expiry is 7 days away. Expiry should be the current month. All right. So these are the few rules that you have to keep in mind. Anurag, that's a good question. Why? The reason being there's something called as time decay, which one of you mentioned earlier. So as the stock goes up, the premium also goes up. Okay. But this is the case for most of the time. But in the last 1 week, because by the time the expiry comes, the premium is supposed to come back to zero. On the day of expiry, the premium is always zero, right? So this has to eventually come back. So this is like a time decay. So as time passes, this starts coming. So if you divide this into 4 weeks, okay, all right. So the last week, the time decay is too much. So it's a major. So here, what happens is in the last week, even if the stock is going up, the premium will still come down because expiry is nearing. So that's why you avoid trading in the last 1 week. So as usual, when the stock is going up, premium goes up. That doesn't happen in the last 1 week. Okay, if you didn't get it, no worries. We'll come back to this towards the end of the session and then I'll explain this to you. Alright, let me just understand the strategy first and then I'll come back and clear this out for you. So probably then it'll be easier for you to understand, Anurag. Okay. Okay, Anita says, once I witnessed on expiry date, price moved by almost 30 rupees. Right. So there are exceptions that can happen here and there, but it's not advisable because most of the time you lose money. Okay. So how many of you are science students? Okay. Most of you are, right. So then it'll be easier for you to tell me what are we looking at. I mean, don't say Earth. I know we have Earth in the background. And what is this? Space Station, satellite, wonderful. That's the ISS, the International Space Station. Thank you, Anita and Nageshwar and Vishal. Right. So now tell me, I have a question. Since you're science students, it would be easy for you to answer this. So this is the Earth. And this is the path that the International Space Station takes. I mean, it's supposed to look like a circle, not a square. Just keep that in mind. So this is the route or the orbit. Now what would happen if the ISS comes a little closer to the Earth? Gravitational pull, okay. So what would happen because of the gravitational pull? Downward, friction. Okay, Nageshwar nailed it. He says it falls to the Earth. So is it possible that this would come and crash into the Earth? Uh, Possible. Vishal says no. Okay. So what do you think, Vishal? Repeat the question. I was away. Okay, Anita, what I'm asking is, let me draw this again. So this is the Earth, and this is the orbit of the International Space Station around the Earth. All right. Now let's say the International Space Station does not maintain its orbit and comes too close to the Earth. Let's say it changes the direction and comes too close to the Earth. So what would happen then? Is there a possibility that it would go and crash into the Earth? Or would it fly off into the space? Or it will come back and maintain its orbit again? Anita said it will enter the atmosphere and get burnt. Right. So basically it will crash, right? Yeah, gravitational pull. So how is it that at this particular orbit it is able to maintain itself and not crashing into the Earth? Resistance and momentum. So can we say the orbit has calculated the resistance and the momentum? So at this point there's the gravitational pull, and at this point there's also equal push, right? So if it maintains its orbit, it stays there, but if it changes orbit, it would either crash, or what if it goes a little further away from the Earth? So is it possible it can also fly off into the space? Yes, exactly. So that's the whole point. Unless the ISS stays on its orbit around the Earth, it will either fly off into the space or it will crash into the Earth, right? These are two things that can happen into the market. So that's why we call this particular orbit as the edge of space, EOS, okay? Because that's the edge it has to maintain. Now, can we correlate this with the market? That's another picture. Anita says Kati Patang. Right. That's a good example. It could be a Kati Patang if it moves too far away from its orbit. Okay, that's another picture. This one taken from inside the ISS of the Earth. Right. Now can you correlate this with the market? It's okay if you can't, because I haven't taught you the strategy, but I'm just generally checking. I'll anyway answer this for you. So anyone wants to try? Anurag says if it has a forward movement, it will keep going forward. Okay, that's a good try. So let me ask you this. Now, let's say we have a swing high. Okay, so we mark this as a resistance. Now, what would happen if price comes here? At this point, what all can happen with the market? Okay, I'll give you a clue. There are only two things that can happen. What are the two things that can happen over here? Either it goes up or down again. So either it will come back and it will keep going up, or it will come here, but from here it will fall. Alright. So these are two things. Now, can you correlate this with the edge of space that we discussed? This particular line, the resistance. So this line is called the edge of space line. Alright, it's the EOS line. This is the EOS line. We mark this line at every swing high. Fine, is that clear? Now I'll explain the concept or the system of the trade. So Dakshay says either it will crash on Earth or goes out of the orbit. Yes, exactly. That's the whole point. So this line is the edge of space. Either this will break it and go up, or this will come back and fall below, right? So this is what is a correlation between the edge of space discussion that we had and the trading system. Now let me tell you the rules of this trading system, how this works, and this is designed specifically for options. So I draw a line at the swing high. This is called the EOS line. Is that clear till now? We'll go step by step so that you don't get confused. Are you all clear with this? How to draw the EOS line? We make the line at the swing high, at any swing high in the recent price movement. Okay. Now there's a breakout. So two things can happen. Either the price will go up or the price will go down. So if the price goes up, we don't do anything. We don't have a trade. All right. Let it go up. We don't take a trade. But let's say it goes up and then comes down and falls. All right. So then we would take a trade. In this case, we would take a trade. We will take a short. So when you're trading options, you will buy which option? Puts, exactly. Then you will take a put option. Now tell me at which point, when am I supposed to go short? Exactly. Perfect, guys. You guys nailed it. Below the EOS line. So the minute we have one candle which is closing below the EOS line, you go ahead and take your short, which means you buy put options. But you need to be clear about one thing. When you have the breakout above the EOS line, first you should have a candle which is closing above the EOS, and then you should have a candle which is closing below the EOS. So, and this, when the minute the candle closes below the EOS, you take a short, and the reverse of that will be for a buy. So let me share with you the rules. Look for, so the first rule is look for a bar to close, okay, it's very important, not a high but close above a swing high. So this is our swing high and this bar is closing above the swing high. If it falls and the market closes below the swing high, it broke out from, then you sell short, which is buy puts. Alright, so you have only two rules. First you look for a swing high, then you look for a candle to close above the swing high first, and then to close below swing high. Alright. Once you see the candle closing, you immediately go ahead and buy puts. So here's an example. This is the swing high that we have taken. So we draw this line over here, this blue line. Daily. Chart period is daily. This is you always do this on a daily chart. Okay, so this is the swing high. We draw the edge of space line. In this particular candle, the green candle, you have the candle, you have a close above the EOS line. Alright, so this green candle closes above, and this red candle actually comes back and closes below. Alright, so this is marked, this red candle. Now we go ahead and short between buy puts, and you can see the price has actually fallen. So you would exit. Now when you buy when you buy the call or put is very important. So you always buy in the last 15 minutes of this day. So 3:30 the market will close. Anytime after 3:15, if the price is below the EOS line, you go ahead and buy puts. Why do we buy on the same day and not the next day? If Vishal says, if I miss the entry, Dakshay says momentum continues. Yeah, momentum continues. So the point is, see, like here, you had a gap, right? So you want to take advantage of the gap. So you buy the puts today itself, so that tomorrow if there's a gap down or a gap up, you take advantage of it. Anita says to take advantage of price, gap up or down. Yes, perfect. That's right, Anita. Right, so that's why we take the trade on the same day in the last 15 minutes. On the daily chart, you go ahead and buy your puts. And as you can see here, you had a 3.5% fall in just one day. So we would easily make our return. So what would be the stop loss and what would be the target? It's simple. It's 30% and 60%. 30%, 60% of what? Capital invested, 30%, 60% of the premium. Exactly. Dakshay, you're right, it's a premium. So let's say you bought at a premium of 10 rupees. Okay. So what would be your stop loss and what would be your target? 7 is the stop loss. 16 is the target. Yes, exactly. Right, because 30% of 10 is 3, so you have your stop loss as 10 minus 3, which is 7, and 60% of 10 is 6, so you have your target as 10 plus 6, which is 16. Alright, so this is your risk to reward, your stop loss and take profit. So in this case, we would have seen that 60% coming on the same day. I think, I'm not sure, it could have taken 2 days. Let's see. Let's take a look how long it took. Alright, so here you can see this was on the 10th of October. The low of this day was 12.8 and the closing was 22. Let's say you go ahead, you bought the put at about 20. Okay, so the next day price opened at 34. What is 60% of 20? 20 plus 12 is 32. So you can see that price opened at 34. Alright, so you should be exiting immediately. It went to high of 51, which is huge, but we are looking at a strict 30-60. Okay, so this is how this trade works. On 10th you got the trade, which was a Friday. Monday it opened with a gap. You're out of the market. Now, in all cases, it will not close the same day. There will be times where you might be holding it for 3 or 4 days, but you never hold it for that more than like a week. Max is about a week. Because option trades need momentum, so we want, if our trade is going to go well, it'll happen immediately. It won't take very long. Is that clear, guys? Are you clear about the rules of this system? Okay, let's look at some examples. Stocks to look at. Alright, now we have, which are the stocks that you should be doing this with? Yes, Anita, you're right, high volume stocks. So how do we find high volume stocks? We go into nseindia.com. Okay, we click on live market, live watch, and equity derivatives. So Daksha says, I do with Nifty and mostly Bank Nifty at it has highest liquidity. Yes, in fact, Nifty's got one of the highest liquidity in the world in terms of options. So that's really good. But then since we're doing the edge of space strategy, we need, the world needs to be a little bigger. So we also include the high volume stocks apart from this, the indexes. Okay, you come here in this drop down, you select stock options. Okay, and here what you see, that's your world. So Tata Steel, Vedanta, Reliance, SBI, ICICI, PNB, Hindalco, BHEL, McDowell, Tata Steel, Tata Motors, Yes Bank, Reliance. Alright, so these are your, this is where you have to look for the edge of space strategy. Like the trades, this is where you look for. Now what if you go ahead and decide to trade on, why should you not trade on stocks apart from these? Okay, Nageshwar says because lesser interest of traders in other stocks. Yes, so you might be getting bad spreads, your entry and exit will be bad, you basically won't make, yes, that's right, it would be difficult to buy and sell, no liquidity. Huge difference in buying and selling price, exactly. So that's a problem. So that's why we only look at high volume stocks. And when should you check this stock? How should you do this? Like how often should you do this? End of day, Anita says end of day, perfect, exactly. So you have to do this every day. Alright, check the high volume stocks every day and then take your positions. So let's look at an example. Let's look at this strategy on the terminal. Vishal says, can you check Sun Pharma? Of course we can. You want to start with Sun Pharma? Let's do that. Or should we just complete this example and then go and check Sun Pharma? Because I want to show you how the premium also moves, right? So let me show you one example first. Okay, so what I'm doing is I'm making a swing high, like I'm marking this swing high here. Okay, so that's a swing high which I have marked with the EOS line. Alright, and you can see price has closed above the swing high in this candle. Then placed there, and finally in this red candle, it has closed below. Alright, so that is our edge of space trade on this day, which was 16th of December 2016. So the closing price was 230.37. So what do you think we should take as our strike price? Anurag says 230. Yes, perfect. So now let's go back and check what happened with the premium. Like how many days it took. Okay, what is the instrument type? Anita says put. Yeah, so put is correct, but not the instrument type. Instrument type is stock options. Thank you. Symbol would be VE. Yeah. Thank you, Dakshay. Select year. So that was 2016 December. So we select 2016 expiry. Okay. So we'll select December expiry, which was 29th of December. Option type was put. So when you're looking for put, you always select PE, put European. So we select PE as the option type because we are looking for puts. And strike price, like you said, we will make it 230. All right. Select time period. So we'll select December 2016 from say 4th to till the expiry. Oh. Okay, and we click on get data. So that's the data we get. Now 16th of December, as you can see, premium closed at 5.4. Okay, so let's say you bought your put at 5 or okay 5.4. So what is your stop loss and what is your target? 30% of 5.4, 60% of 5.4. Can you do the calculation quickly? How much is your stop loss and how much is your take profit? What is 30% of 5.4? 3.70 stop loss. Alright, thank you, Vishal. Stop loss is 3.70. And target is 8.6. Nageshwar, stop loss is 3.7. So if your premium touches 3.7, you're supposed to exit. Anurag, your question, how do you read the chart? Okay, so you look at open, high, low and close. Okay, this open, high, low and close is talking about the premium. So all this information is your premium. So this is what you focus on. And here is your date. Okay. Now, when you see the premium reaching 8.6, that's your 60% return. So you're supposed to come out. Okay. Nageshwar says, can you please show me on Pro Upstocks how to place the stop loss? Okay. How to place the stop loss? Guys, we will be covering that about the terminal, how to use the terminal on Friday. So we'll discuss that. Don't worry, like it will be covered. How to take a trade, how to enter the, contract size, how to select the entire terminal. We'll go through that on Friday. Let's just complete the important strategies. Is that okay? Oh, Nageshwar already said, okay. Thank you, Nageshwar. Thank you for your patience. We will cover that on Friday. Okay. Anurag, are you clear with how to use this chart? You just look for open, high, low, close. So closing was 5.4. This is the chart of the premium that at which you'll be buying and selling. All right. So when did we hit our target? 19th. The low was 4.45. Our stop loss was 3.7. So we did not hit the stop loss, and the high was 7. So we were looking for 8.6. So we did not get our target on 19th. Then on 20th, the high was 9.4. All right, and the low was 5.9. So we exit on 20th. Yes, exactly. So this is how you take the trade. Is that clear to everyone? Okay, that's good. Now, before we go into more examples and look for the edge of space, the EOS trades, can you quickly give me a rating on a scale of 1 to 10 of your understanding of the edge of space strategy? Oh, Vishal says 10, Daksha says 10, that's nice. Anurag 7, okay. We'll work on that. Nageshwar 9, Praveen 10, Anita is also 10. Wow, lovely. That's great. So now you guys need to, Vishal Singh is also 10. That's awesome. So what about Praveen? Praveen also is 10. Anurag is 7. And who was 9? Somebody was 9. Nageshwar is 9. Alright. So now you guys need to help me identify the trades. I'll open the charts for you. So let's now go ahead and look at, okay, this is done. Everyone's clear how we got this trade? Alright, great. Wonderful. So now let's check Sun Farmer. Okay, do we have a trade here? Okay, September. Let's check September. So September, this is the swing high. Okay, this is the EOS line. This is the swing high. And first you have a close above. Then you have a close below. Okay, now do we have a buy trade? Okay, so here's a buy setup. You're supposed to enter in this on the last 15 minutes of this candle. Are you guys clear with the buy setup, the long setup, which means you'll be buying calls? Vishal says 13 Jan 2017. Okay, let's see 13 Jan. Yes, Vishal, perfect. That's a good setup. So on this red candle, we should be taking a short. Okay, 2 days, it's still there. So we have, what's the day today? Wednesday. Alright. Stop loss hit? Oh, okay. Alright. I thought we could be holding it till Friday. So if stop loss hit, then we need to come out. But is it featuring under the high volume stock list? I mean, I think currently it's not, but does it generally feature under high volume stocks? Generally? It doesn't? Okay. But setup is okay. Yeah, yes, exactly. Setup is fine. That's the right way of identifying it. That's correct. So let's look at some more setups. Let's try and look for, actually what we should do is we should try and look for setups from here. So let's start with Tata Steel. Okay, let's try and cover as many as we can. Okay, let's see Tata Steel. Okay, can you identify a few setups here? I see quite a few. We look at the stock option futures. Vishal, we look at the underlying stock. Look for the trade on the underlying stock. The chart should be the underlying stock, the cash markets chart. Oh, in NSE India, you look for stock options. Okay, Anurag, 15th October, Anita, mid-December. Jignesh says, can we not check on future price chart? No, you need to look at the underlying stock only. Okay, December mid. Okay, so let's start with the first one, which is 15th of October. So this is October 15th. Oh, somewhere here, right? Okay. So what's your trade for put? Yes. So which candle do we take the trade? Do we take the trade in this candle? Or do we take the trade in this candle? Green or red? Okay. Daksha says first, Vishal says green. Alright. Anyone who wants to take the trade on the red candle? Praveen says red. Okay. Anita also says red. Nageshwar says on red candle but. So this is a good example. See guys, Nageshwar says on the red candle but wait until low swing hit. Vishal says late entry on red candle. Okay, so let's just go back to the rules. As per the rules, you have a close above the EOS line and then a close below the EOS line. So that's it. You don't wait for red candle because the rules don't say that, right? So one close above, one close below. That's it. The closing of that day is, it's okay if it's green. It gapped down and it's a small green candle. It was just a correction. So it is still not closing above, right? So if you had a gap up closing here and then the green candle would have closed above the EOS line, then you don't have a trade because you want to close below the EOS line. But in this case, Since it closed above and then closed below, you take the trade on the green candle itself because you have your stop loss to protect you. Worst case scenario, you lose the 30%. That's okay because the accuracy of the system is quite high. So in the long run, you will be making good money. Alright, so are you all clear? No confusion, right? We always take the trade on the first candle which closes above, below. So first you have a close above and then a close below the US line in the case of a put. Okay, more setups. August 14. Okay, do we have a setup here? In this candle? What do you guys think? Do we have a call, a buy setup here? Akshay says no. Okay. What about the rest of you? No. Yes, we don't have a trade. The reason being, what's the reason? Vishal says not close US below. Yes, exactly. So we don't have a close below US. So that's why we don't have a trade. That's right. Okay. What about now? Do we have a trade now? Yes, Akshay is right. It didn't fall below US. And now what happens? Okay. Yes, perfect. So now we have a trade. We have this candle closing below and this small candle closing above. And you look, the next day you would even exit. It's a good setup. Yes. Thank you, Vishal. It's a good setup. So that's how you don't need to look for these setups. What else? Is there any other trade that we can spot? Yeah. Okay. Then we move here. So is this setup correct? Yes. Perfect. So we have a setup here. Though I'm not sure whether it would hit the stop loss or a target because we have a green candle next day. So I'm not sure. We'll have to check the premium, but the setup is right. Okay, now let's see any other setups that we have missed. This one we have, did we check this setup? We haven't, right? So the line is actually a little crooked. You have to straighten it. Okay, so here, what do you guys think? Is it a decent setup? Yes, and I think you would open with your target. This looks like a good gap, so I think you would open it. The price opens at your target. That's how it should be going. Okay, so here's one more setup. Is this right or is this wrong? Okay, it's right, but what happens? Oh, I think I chose the wrong pen. Yeah. So what happens? Do you make money or do you lose money? The setup is correct, but yeah, so you would end up buying here because this candle spikes up but does not close, right? So you buy on the next day, and after you buy it goes up a little bit and comes back down. So I think you'll hit the stop loss. So you might end up losing money in this trade. Okay. Let's see if we have anything else. Okay, what about this one? Is that setup correct or wrong? Do we make profit or do we make loss? Right, that's correct. We make profit. Anita says wrong. Daksha says setup okay but no trade. Why is that? I thought that we make profit in this trade. So we are closing. We are wait. No spike above EOS. So see guys, this is the swing high, and this candle is closing. Now the green candle is closing above EOS, and then the red candle is closing below the EOS. Well, let me zoom in. It may be maybe it's not clear on my screen. Let me try and zoom in for you. Oh, okay. I've done something. Yeah, here it is. Okay, is that clear, guys? Now, see, I think the setup is right because we have it qualifies as per the rules, so setup is right. Anita? Anurag says end of July. Let's check end of July. Yeah, okay. Are you talking about this one? I don't think this is a setup. Where else? Just above July line. Okay. So which is the swing low are we talking about? Or swing high? You say swing high above July word. Okay, swing high above July word. So I see this as the swing high only. Oh, are you talking about this small red one? Oh, okay, okay. Yeah, since it's such a small one, I missed it. So we have this as a swing high. You have a closing above and then a closing. Okay, here you have a closing below. So this is not really a swing high. It's this one small candle. So just ignore this one. Your logic is correct though. I'm not saying you're wrong, and your logic is correct. It's a very small one. This would be a better one. I think we already checked this one, right? Yeah, we already checked this one. Okay, so that is Tata Steel. Do you want to check more in Tata Steel or should we look at something else? Vishal, we do consider minor swing high and swing lows, but only this one, the problem is, see this is like really small. So in this is like an exception. Otherwise minor swings are okay. You don't have to consider only major ones. Just this one, we avoid it. It's too small. Okay. All right. Dakshay says index bank nifty. Let's do bank nifty. Let's start from let's start from here. The daily right here. Okay, so let me know where you find the setup. Okay, that's just before December. Buy call. Buy call before December. Which is the swing high that you've taken? Is this correct? Okay, where December is written. That's a swing high. So where's the EOS line? First, okay. If I keep this as a swing high, then which is a breakout? The only setup I see here is this one. I may be missing something that you're saying, but what I see is here. Okay, so here you have a put, like you buy puts. Oh, that is the one? Okay. No, since you said call, I got a little confused. So there's a put. You buy puts here. And then you have a call here. Is that correct? Have you all understood these two? Do you agree that they all meet the criteria? Oh, okay. Actually, you wrote by mistake. Oh, no worries. That's okay. All right. So here we have two. One is here. This is your sell, which is your put. And then this is your long, which is your call. Okay. So we have two here. And let's go ahead and see if we have some more. Okay, this is a tricky one. So I'm marking this swing high. Sorry, this one. Okay, Anurag said just above April. April word. Okay. Yeah, that I can see that. That's a good one. Correct. And there's some more which we've missed. Here's one, a good one. So this is a little tricky. See, if you can observe, this green candle did not close above EOS. Alright. So if you were to take the trade, you would have lost money. Then this candle is the one which actually closed above, and from there it has gapped up, and it is, yeah. So the actual signal came in this candle. Okay, so if you are not clear with the swing low and the price closing above, you can make a mistake, because sometimes this can also happen. So you need to be careful. You have to wait for the fake breakout and then take the trade. Anurag says also at the peak we can take as EOS April peak. Okay, let's see. Oh, this one, right? So this is a swing high. You need a close below and then a close above. Yeah, that makes sense. It's a good trade here. So this candle is a swing. It closed below and then next candle closed above. So these are two trades. Okay, mid of May, yeah, somewhere here. This one, is this actually a right setup? Yeah. Okay, swing high. So swing high, in the mid of May, you're talking about this swing high. Okay, this one is not a good setup, because see, if this is the swing high, here the swing high, now here price just broke it. Now it never came down and it did not come and close below the EOS line. So you don't have a trade here, like not a short. Is that clear? Do you agree with me, or am I going wrong somewhere? I don't see a trade here. If you consider this as your swing high. Okay. Alright. So that's what we have here. But here you have a good setup. Small candle but powerful one. You see a gap up next day, price moved up. Alright. So in this range bound market you get quite a few signals like these. Alright. Let's see if we have any more. Maximum span that you should take in consideration. Vishal, the question is what should be the maximum span that we can take into consideration? So maximum span meaning there is, if it is just price action like in that area. So for example, okay, if I were to take here, this was the previous swing high. Okay, so okay, maybe this is too much. Generally there is no maximum. You look at price area. Okay, you look at the support and resistance. So if a support was reached say in December and then price has come back over there in June, so that's okay. Like here you get a trade as per system. So this is as per the setup is right. You have a swing high, you see a candle which is closing above, and then you see a candle which is closing below. Alright, it did not make money, that's a different scenario. That's okay. But there is a possibility that it can also come here and it would have continued to fall because this was a resistance, so we can consider this as a fake breakout. So there is no maximum span. You always look for a previous swing high in that price area. So it's more like you are looking at the price area, the price action in that at a particular price level, the price action. Alright, so span is okay. Because the market doesn't forget its support and resistance, even if we might not see it in the chart. Okay, there are a few questions. Let me check your questions. Okay, I'll go one by one. Vishal's done. Dakshay says, what about current month? It gave too many opportunities, mainly from November to Jan, big events, etc. So big moves it gave. Okay, let's see. Mainly from November to January. See, when you have a move like this, you don't take that move, okay, because that's totally fundamental. So it'll be dangerous for you. So you don't take those moves. But something like this, which is more normal, this is okay. You can take these. Just avoid such huge candles. Otherwise, it's okay. If it's giving good, more number of trades, that's actually good. So we can, make money, because there might be a period where it's not. So here, this one is okay, and this is a swing low. Okay, here was one. Yeah, you're right. It gave a lot of signals. So wherever it matches the criteria, it's fine. See, even this one, it gave the signal and then gapped up. So when you have a very big news, so this was 9th of November. What was, do you guys remember what event happened? I think this was Brexit. So when you know that a very big news is lined up, at that time, stay out. Don't take the trade. But otherwise, things are okay. Okay, is that fine, Dakshay? Going to Anurag's question, sir, can you please explain the expiry day concept? Like what happens if you don't do anything till that day? Okay. Yeah, oh, okay. So Anurag, Ashwin just answered your question. Your position automatically gets squared off. Alright, so your premium becomes 0. So you lose your premium. Okay, okay. We have a discussion about Trump or Brexit. Now, so this, since this is November, I think it was Brexit. Trump would be somewhere here. Maybe this day. I don't know. Okay, this is only 10th of July. 10th of Jan. So not here. Okay, are we clear now? Are we getting a better hold of the concept? 6th of November is what Anita says. Let's see. 6th November. Anita, do you have, okay, 8th of November, right? So, 8th of November is, this is the day, 8th of November. Are you talking about this swing high? Okay. Yeah. So actually see, this is a swing low, and then the swing high is, see, this is a swing low and this is a swing high. There's a gap in between, but this is not the swing high because price has only kept moving. So we don't call this a swing high because of this gap. So it was actually price moving from this low to this high. Okay. Okay, Vishal says, in any case, we are required to buy stocks, or is it just premium which is traded always? you have to buy just the premium. When you're trading on options, you will be looking at the premium, not the stock. That is the cash market. So using this, you'll be trading on the premium using the underlying instrument, stock. Okay. All right. So let's look at other stocks. What are the other volatile ones? Tata Steel we've done. VDL we take a look. Okay, let's check Reliance. We have some time so we can check. Okay, I'll stop drawing these lines. Reliance. Okay, can you identify from here? Anurag says September swing high and Vishal says December. September swing high. Okay. Yes, that's a good setup. September swing high makes sense. Anurag, thank you. So we sell in this candle on 21st of September. So this was the swing. This was the close above and then close below. Then you had a long here in this candle on 30th of September. So how many trades do you think you can get using this strategy per week? Especially the guys who are trading options, what do you guys think? Daksha says difficult for some stocks, you won't be getting any. So if we take, let's say we consider all these stocks, the one that feature here, along with your Nifty and Bank Nifty. So in a month, 3 to 4 max. Yeah, I think even I agree with that. Max, no, like minimum 3 to 4. So I'm looking at least one in a week. Like the worst case scenario, one in a week. Do you think that's fair? One in a week? Possible? Yes, I feel that one in a week is the least that you get. Sometimes in good weeks you might get say 2, 3. Or if your first one is, you're able to exit it soon, then you can also take one more. So you should start with one a week, because if you're making 60% on the investment, it's good to start off with. Right? Okay, so what did we have in Reliance? Okay guys, any questions? We are almost coming to the close of the session. Are you all clear with the rules? So Anita, question is whether this strategy holds good for intraday equity trading with candle 60-minute period or less. No. You try to use this strategy for options. You can use it for equities, but not in the hourly time frame. Daily may you can still use this on equity trading as well, but not intraday. Okay. Tomorrow we'll talk about the Newton's method, which is very versatile. That can be used for intraday and for long term. And that can be used in currency, commodity, equity, you name it, everywhere. But the EOS can also be used on a daily chart on the equity market, but preferably for options. Certain trades are okay, because the problem is, or actually we'll leave this discussion for tomorrow. Because tomorrow I'll teach you the Newton method, and then we can compare the Newton method with the EOS. As of now, we'll not talk about it. Now today let's talk about only the EOS. So where do we have any more setups? Okay, we have a setup here, although it was not very powerful. So it closes below and then closes above. So it moves up a little bit, again comes down. So we not really very profitable. Here you can recover that loss. So candle comes down and then goes up. Vishal says Nifty. Oh, we check Bank Nifty, right? You want to check Nifty. Okay, let's check from here. From Jan. Okay, so let's search. Okay, now you have to identify the setups. Vishal says April swing high. Okay, April swing high. Are you talking about this swing high? Yes, okay. So see here price went up and came down. Yeah, so here's your entry. Okay. What about this one? Is this the right setup? Yes, okay. Okay, do we have a trade here? Yes or no? Vishal says no, Anurag says yes. What about the rest of you guys? Do we have a trade here? Should we buy in this candle? Okay, so everyone says yes. Now, as per the rules of the EOS strategy, it's a no. because you for the rules of logically it's a yes, but as per the rules it's a no. Alright, so the rule is first you have to have a close below the swing low and then a close above the EOS. So it has a close above but no close below. Alright, but if you look at it logically, this was the swing low, price gap down but closed bullish. Alright, and close above. So you can take the trade. This is an exception. So that's why you can take the trade. But ideally, as per the rules, no. But logically, so you'll encounter these situations very less, very rare. But during this time, you should look at what's the psychology. So you can take the trade. I mean, if I were in your place, I would take the trade. But if you just want to follow the system, that's also fine, because as per our rules, it doesn't have a trade. Sometimes you have to use a little bit of logic. Okay, that's it. No, not much. Don't find much here. I've had more success with the trades which are the underlying stocks listed here than Nifty. Let's see PNB. Okay, Dakshay says Axis is in a clear uptrend. Okay, so there's a trade set up here. Let's look at Axis. Anurag says above October. Okay. Yeah, but above October, the thing is, if you draw this, it's here, but after that you have a lot of other swing highs. So, okay, you're right. This is a trade. Just after that, okay, you're talking about this swing high. So you're talking about this swing high. Okay, so yeah, that makes sense. You have a rejection. It's a good setup. Testing a resistance and then failing to break it, it's a good setup. Not as per US, yeah. So it's actually it's a close call. Let me see, is it actually close above or not? Yeah, as per US, the closing did not happen above. It had an opening above and closing below. So this is the one where we had an exception. Yeah, as per US, no call because you didn't have a closing above. Okay, I'm happy that you are all clear with the rules. You know which call works, which call doesn't, as per the rules at least. So that's wonderful. Okay, somebody said Axis Bank, right? Let's take Axis Bank. So Axis Bank, this swing low. Right, so here we would have had a trade. Okay, tomorrow result of Axis, yes, Federal and Axis is in boom now for a few days. Right, it looks like it's bottoming out. I mean, it has been, after downtrend, it has been sideways for some time and looks like it's already done a breakout, which is not a fake breakout since it's going up. Unless we see a close below this, so then we'll see, but doubtful. Looks like it is an uptrend. Alright, so can you quickly give a rating on a scale of 1 to 10 now for the edge of space strategy? Most of you already 10. Some of you are 7 and 9, so that's why I'm asking again. Nageshwar is 9. Anurag is 8. Okay, that's good. You moved up a little bit. Vishal 10. Praveen 10. Other Vishal 10. Anita 10. Okay, that's lovely. Daksha is also 10. Nice guys, that's great. Since you did not do the homework yesterday, I'm not giving you any homework for tomorrow. Tomorrow we'll talk about the Newton's method. If you have any doubts, you could keep that ready for tomorrow's session. So when we start off, first 15 minutes, we'll clear doubts from the last 3 sessions, that is session 1, 2 and 3. Okay, so any doubts from these sessions, you can bring them up tomorrow. And like Ashwin says, now you guys are ready to start analyzing EOS entries. If you do find some good setups, please share them with us so we could also benefit. Right, thank you Dakshay. See you all guys tomorrow evening at 7 p.m. and let's discuss the Newton's method. Good night. Anita says brokerage guide not yet received in trading account. Anita, you'll have to send a mail to support@tradeacademy.in. Dakshay, yeah, you guys have to send a mail to support@tradeacademy.in and it'll be taken care of. I'll also remind them from my side. Alright, see you guys. Good night. Nageshwar, good night. Anita, bye bye.